Hey everybody, this is David Scarica. Sorry, I'm not in my usual Miami Vice attire, but it's about 6:30 in the morning. Let's get the. To make that a little less bright, I would need a light in front of me, but I really don't care right now. Um, um, and that's about as I got in the darkest setting right now. But anyhow, yeah, I just wanted to do a quick video here. I got up, I went to bed early last night, and kind of got up, couldn't get back to sleep, so and have to run around and do a few things today. So I figured I'd do this right now. Um, uh, yeah, so we're going to talk about the markets a bit. We're going to, and most of this I'm going to do screen sharing anyhow. By the way, I've had a few comments on my hair. I'm not cutting it until COVID is over, and that could be a long time. So enjoy the rock star look. You know, and so anyhow, yeah. So we're going to take a look at like some charts. The failed silver breakout, which I'm actually a little bit happy with because I'm not a fan of these Reddit traders at all, as I've stated here in the past. So let's just take a quick look at all this stuff. So let's quickly look. Now, there's one thing which is really, I think, kind of getting interesting here in the market is I was just looking at the US dollar. We can see this recent kind of strength here, and it's up again this morning. I could actually see us getting back to this October level, couple points rally here, which I think actually would be somewhat negative for the markets. I think it's maybe warning something. So you can see here the 10-year chart. We hit kind of this kind of support here around the late 80s in the US dollar. So I think maybe we could go up here, maybe even 95. That'd be we're up 94, 95, the 200-day moving average. And then we just kind of go down after that, right? And anyhow, yeah, we could do that, and uh, and then again head back lower after that. And I think that usually you get that tightening liquidity. We saw here last year when the dollar spiked when the market crashed last March. So I think that could be a sign of it. If we go look at the spiders. Yeah, even this fall kind of, you can't really see it. I was just gonna look at a 1-year chart where we can really see it. So even when the dollar kind of rallied a bit this fall, the summer and fall, you can see here the little corrections in the market. So if we do get a dollar rally, I think at the very least we could see that kind of correction. Maybe back to the 200-day moving average, and this market has gone up so much. You can see the spiders would fall 50 points, which is a pretty good sized correction, 13-14%, if we got back to the 200-day. Now it's sloping upwards, so it'd probably be a little higher, but we could definitely have a 10 or 15% correction to there at some point. I think that will sell the stimulus as well. Like, I think a lot of that's been priced in. Obviously, look at if you go look at, there's the election. And part of the reason what happened with the election, the stimulus priced in. So another interesting thing with the dollar and all this stuff, I think one reason that gold's coming off as well is you can see this move higher. Now, I think this could have been the secular low in rates at 50 basis points. Now, to call the end of a 40-year bear or bull market is kind of tough. But I think another thing that could maybe shock the market is if, and I don't think we're going up in rates because we're expecting more economic growth or all these things. I think the reason this stuff is all happening is because go look at the spike in rates. That's when the Democrats basically took over, the Senate when they won Georgia. I think this spike in rates is happening because they're expecting more spending, more stimulus, more debt under a Democratic administration, and that and rates are kind of going higher because of that issuance and more supply in the market. So at some point, the Fed is going to have to buy because we're in a totally different world than we were even pre-COVID. Even though deficits were huge, the 10-year bond was 3% back in 2018, 2% pre-COVID. And here's another warning. Notice how the 10-year bond, it was actually going down. Actually, that's another, we'll look at gold again in a second. But so yeah, I think that if we get to that 2-3%, now the debt is so large, the government essentially is bankrupt when it gets back to that level. Okay, so this is the gold contract. And what we can see here is look, yeah. So like I think the gold moving lower is a bit of a warning too, that some kind of deflationary trade or something could be in the works here. So I would definitely watch out for that as well. Now the question is, how will it react? Now, at first, when COVID started taking off, gold actually, started to move higher, and then and then kind of got smashed with the market. So does that happen again? Do we see a quick, say, move down to 1700 or something like that? 1650, even if the market smashes, and then gold will probably be the first thing to come off the bottom, like it did. It was hitting the new highs for the move in April, May, where of course the market didn't hit new highs until like later in the year. So I think that's what kind of happened. And of course, everyone's favorite trade recently, SLV, silver. You can see the kind of the false breakout, and we went back down, and kind of giving yesterday's gains back. I'm happy about it because I've stated over and over, I'm not a huge fan, not a fan. I can't stand this quote unquote Reddit revolution or and the whatnot. This is like I don't care about all the calls for, manipulation, and Wall Street won't let us play the game and blah blah blah. This is tulip bulbs of we're gonna get the chart right now. Yeah. Yeah, this is the tulip bulbs of, this is them in 1736 to 1737. And you can see on November 12th, trading at almost nothing. Really GameStop might be the preview for this by February. We almost topped it almost the same day too. And then you can see went from whatever 10 10 to almost 200 on February 3rd, and then collapsed to 10 by May the 1st. So basically in 6 months made the complete round. So that's probably what the GameStop chart will end up looking at, looking like. So here's another chart right here. We can actually start here. You can see it's a 10. That was the last move of the bubble, but actually started in 1634, slowly moved higher, and then became this all-out mania. And again, this is Pijsten guilders, which is the Dutch currency. And you can see it went from 1 to almost 60. So it went up 60 times in value, and then collapsed to below 1, by the end of 1637. So, I think that's where we are. And, the stories about shoe shine boys and et cetera, et cetera. That's all I think. I think it's just the late cycle, the consequences of all this free money, all this cheap money, these people piling into these stocks, et cetera, et cetera. So I think you have to watch out. And, I've seen it in my own portfolio. It's benefited me. Like I've had a few of the stocks. I know a few of you, I offered them the Mountain Valley financing to a lot of you last year. And I'm already out, just so you know, I'm out of most of my position in this. But you can see this has gone from 10 cents to $1.70. And I think the financing was at 20, 30 cents or something like that. So you can see this has gone up a great deal. And then, I'm in another stock and I still own this Plymouth Rock, which was up a lot yesterday. Oh, sorry. I always forget these things are at CA, they're on the CSE. But yeah, you can see it had this nice move here yesterday. And same thing. I bought a 15-cent financing. I think a lot of my subscribers bought like a 25-cent financing, and had this huge spike. So this thing is we'll have to see whatever happens, right? But what I'm trying to say is this has benefited myself. Like I don't know if you remember that, like a stock we interviewed last year was Hollister, which is a marijuana company. Same thing. The stock has done fantastic. Up from 10 cents American to over 30 cents. So all this bubble has, and that's a marijuana deal. And, all these marijuana deals have rallied because with the Democrats are getting power, people are hoping for full on federal legalization. Right. So, this thing has affected, kind of everything. So, but it doesn't mean that the market has to top right away. We saw like signs the bubble was bursting, in the housing bubble in 2007, when a lot of the subprime lenders started going under in early 2007. Well, the market didn't bust till late 2008. Now, I don't think we'll hold up this long because this is such a manic media. But, if you go look at a chart of I'm going to see if I can find this. I'm looking for it now. I'm looking for back in the day. There was something called Books a Million. No, it's a CSE stock. And Books a Million. See if I can find an old chart of here. But so Books a Million back in like 2000 and no, this is just about books. It was BAM Books a Million. There you go. Well, let's go on the Wikipedia page and see if it has an old chart of the stock. Now it's a private company. But anyhow, Books a Million in 1999, they said they were going to like start their own the website, right? Or 98. There you go. So there you go. Here you can see here. It's your November 25th, 98, went from $3 to $38, intraday high of 47, et cetera, et cetera. Then 2 weeks later, the share price was back to 10. And then by 2000, the share price has returned to 3. Well, that happened over a year before the bubble burst. Now, I don't know if I don't think we have over a year left like they did in late 1998, but I'm just trying to show you that this is the kind of thing that happens during these bubbles, right? So, and there's kind of like these echo bubbles or mini bubbles that happen on kind of as an offshoot, right? So it's just hard to know, like the globe.com, all those IPOs happened in 99, but again, the collapse didn't happen until 2000. So we just have to look at these things and realize that maybe the collapse won't happen right away. I just think we're so parabolic, we're so overvalued. The sentiment, like we have record call buying, all this sort of thing. Like I even want to see if we're topping here. Like I'll look at some of the internals, like new highs, et cetera, et cetera. The question is, are we just going to kind of do maybe what we did last September, where you see this correction like we had, and then and then this failed rally, and then this held, and then we go higher again. Does something like that happen again, and we get a final blow off into the spring or summer, or do we actually start some kind of decline here? One thing that's interesting is the market went up about 6 times in value during the 1921 to 1929 bull market. And if we go look at this, the 666 bottom in the S&P, we're up about 6 times in value. That would be about 4,000 in the S&P. So, and actually, if you're kind of looking, it was almost right now, it's almost the same times 10. The Dow bottomed around 60 or 70 in 1921, and then went to about 380. And now we've bottomed, around 600-700 and gone to about 3,800. So that's kind of interesting too. So, and then this is a log chart. You really see the parabolic move when we look at this. So how can this ascent, this rate of ascent, really continue here? And I think those rates going higher, the precious metals moving lower, the dollar rallying is all warning. So some of the shorts I like, which I talked now, you're getting a good I think chance to kind of get back into them, is an even better entry point than me, because I shorted ARK like here in the low 140s. Now it's 146. So this is the ARK are these funds, and they own all the crap. They own Tesla. They own all of this garbage. They own all these momentum stocks, super high valued stocks. And if we go again, look at a longer term chart here of ARK, we can see this huge parabolic move that really started here. This thing was trading mostly between 40 and 50, and now is 140. And I think that when the bubble bursts, it will just go right back to that 40-50 range. So I have 2 sets of puts on this. I have the January 2022 100s, just in case this thing doesn't pan out to the second half of the year. And then I got a little more aggressive June 80s. So that's like, I call those like a lottery ticket put, meaning that, I do that just thinking that, hey, if this stuff blows up in the next year, the next few months, if we do see a decline like last March, or like what happened in March, April of 2000, this ARK stock could already fall 50% then, and those puts would probably do quite well, go up 10 times or something like that, So that's just kind of 10 or 20 times. That's kind of my my fun. Because the thing is now we're in such a bubble. We don't know when this stuff could keep going for 6 months, or it could just blow up to more, like, in 2 months. So we just don't know. So then another short I like, even though it is a company makes a lot of money, it's kind of at a new high here. But I like Microsoft just because again, you can see like Microsoft has gone crazy. A longer term chart, if we go, let's do a longer term chart. Let's go back like 17 years since the bottom of the .coms. You can see like totally crazy, gone from and they have not had this kind of growth. And the premiums, the one thing I like about the Microsoft short, the premiums are low, right? So the ETSD I really like too as a short. It looks like it could fail here. I don't know. But again, you're going to get, if you were to do this now, you're going to get in better prices than me because I started shorting last week. And yeah, you can see SD, same thing. The stock was down below $10 in 2016. Now it's over $200. And again, not crazy premiums. And like now we're seeing this phenomenon with people like the Reddit traders trying to make shorts cover. So the thing that's nice about ETSD too is this is not one of these crazy shorted stocks. Not going to be a target of whatever Reddit traders or Robinhood traders. So just a stock that can kind of roll over. Anyhow, so so I think that's about it for now. Yeah, so I'd be a little wary. Like when I look at the gold stocks too, I think some of you would want this to me just looks like a continuing consolidation, but I just don't know how long this consolidation is going to continue to last. Like sometimes these consolidations in gold stocks can last. Like look there's nothing here that says looks like a collapse is imminent, but like, who knows? Does this consolidation last for another 2 months and the GDX kind of drift lower to 30 or 32 or something? I just don't know, right? So I think, and we're in a difficult position with gold because does it start to move if there is a downturn in the market? Does it, is it the first thing to come back? So obviously it can get taken down too if the market declines and there's a bounce in the dollar, but you kind of have to own some core positions because you're not going to be able to time it perfectly. And what happens if it does just kind of consolidate here and then begins to break out higher and you don't have any gold stock? So I think you kind of have to have this thing where maybe you don't want to be completely crazy overweight gold right now because it could continue to drift lower, but you have to have these core positions in these positions. And I know some of you did this, but I'll show you. This is why, because I know I do a lot of venture capital, and I know some of you own this stock. Some of you did the 25-cent financing they just did. So this is a little stock I own called Norseman, and I own it both in my dad's retirement account and myself personally in a couple financings. And like that's a perfect example. This stock was up 27% yesterday. Pretty good volume. You see probably the highest volume day in a number of months, or one of the highest volume days. And that's the perfect example. Like, let's say this stock breaks out of here in this kind of 45 to 50 cent resistance level, it could go to 75 cents to $1. So that's why you kind of have to own these core positions because you don't know what can happen in all of them. And like, for example, during this correction, one of our good holdings, Galani, look how well Galani has done since the low in November. The stock is 30 cents roughly. And, the low was 19.20 back in November. So this is why you kind of have to own some core positions because you don't know which ones can move even while you're still in a consolidation, right? So anyhow, I'm just going to leave it at that for now. I think that's enough for now. So yeah, I think the dollar rally, these interest rates backing up, and gold kind of consolidating might be kind of warning us that something's going to happen in the major markets. Now let's go. I'll look at the futures this morning. I think they're up a little bit, nothing like too crazy. Yeah, the Nasdaq's up 50, the Dow's up 20. So I think, and two, I think we could continue to drift higher in the futures until until we kind of see the stimulus package or whatever. So you see crap like this, we're getting an 800,000 jobless claim is pre-COVID, we were getting 200,000, and you see these articles like that. So, so anyhow, yeah, I thought I'd just leave it at that. And I think we're about done here for now. So I would just like I said, I gave you a couple short ideas. Oh, another thing I would look at if you wanted to short, I just bought some of this too. Oh, sorry. This is the 2x short of the Russell 2000. And the Russell 2000 is really where a lot of these like game stocks and bubble stocks were. And I think one reason that the Russell 2000 is, I'm going to show you, you could also short this. You can go long to the RWM or just short the, I think one reason it's gone so much higher than, or is because these, these short squeezes are happening in these small cap stocks. So I think that's a major reason in Russell 2000. And that this chart doesn't do the recent move justice. Like if we go, I'm going to take the log scale off again so we can see the kind of parabolic. Like look at this, just straight up. So the question is, how long can this kind of ascent continue? I'm looking at more like last year it was March too. It's hard for me to see back-to-back Marches like that. But I'm looking, I remember 2000, it was April and everything kind of fell apart. So I'm looking more at March, April as kind of the periods where we could get a correction. And if you actually go look at 1929 in 1987, even if you think there's going to be a blow off into the summer, again, March, April were kind of both in each case had a correction, which led to the final blow off. So I think March, April are kind of when we see this next phase, maybe the correction. And then who knows? We'll have to play it by ear. If it just looks like it's going to be a correction, you'll know by May, because if it's not breaking down by May, it'll probably subsidize and rally into the summer. And then if it's not going to break down by May, so sorry, if it that will happen. If it does, probably we're going to have a really ugly April or May. So that's why you got to have some hedges, and that's why too, like some of those stocks I showed you, I bought like a little placement that Plymouth Rock did again, and I got another little fintech company. Unfortunately, like I get offered these things, and I got to admit it, the average subscriber really can't do them. Like I don't sit there and pump these things that, for the most, I don't pump something that I could buy in a 10-cent financing that's 30 cents because it's unfair to my subscribers, unless I can get them in a secondary financing or something. But anyhow, I'm doing a few of those swings with very tiny amounts of money, just in case we do continue some kind of blow off and whatnot. But for the most part, I'm getting pretty defensive. I bought the puts. I've raised cash. I'm just going to kind of see what can happen here. I don't mind buying some precious metal stocks. Actually, stock I was going to tell you about too, because I know a lot of you own it, is Vendetta, VTT. Oh, I got two actually. So Vendetta, you can see it's kind of starting to come out of a base here. Very good volume the other day. Again, let's get a longer term chart so you can see kind of how it's moving. Yeah, so you can see actually the bottom last year, first move up, now kind of looks like it consolidated and might be coming out of that consolidation. And this is a base metal thing, and base metals right now are doing better than precious metals. So maybe that will help as well. And then another one I really like is CAT.ca. This is a gold, copper, silver play with a kicker in lithium. They have a lithium project in Zimbabwe. Not exactly the greatest place to be, but huge resource, past producing, etc. And but none of that has that stupid thing there makes you can't see it, but you can see the 1 year chart. That's because they 2 year chart. You can see where it used to be. Whatever that stupid things there, so you can see. But yeah, the stock, it made me look like it's gone up a lot. But it's gone from 3 cents to 8 cents. And so here's the thing: for American investors, they don't have an OTC listing right now. They should get that by the end of the month. But if you're interested, they're going to do an 8-cent financing, full warrant, 16 cents. And what's great about the warrant, they're going to list the warrant, so you'll be able to trade the warrant as well on the exchange. So that gives you more liquidity, potential extra little boost in your investment. And the great thing about the 16-cent warrant is also good for 5 years. And that's one key I've really come across is you can't just look at, this company has a warrant. Some of these warrants are only good for a year or two. That's not that appealing, But a 5-year warrant means that, if you wanted to sell the stock after 4 months, you could, and then move your money somewhere else, you could sit there and if this stock spiked to 50 cents, you've got 5 years for it to do so. So that's kind of the good thing about that as well. So yeah, I'm just going to leave that there. I think that's enough for now. But yeah, the CAT, if you're really interested, I'm pretty excited about this. Mike Swanson and I are doing some marketing for it right now, as it's full disclosure. Mike just did a little blast on it. I'm going to write up on it. I am going to interview the CEO today, actually Thursday at 4 p.m. At the market close. So I'll have that interview out either Friday or Monday. So yeah, but then if you're interested in CAT, just kind of drop me a line. I should have the forms and the whatnot by the end of the week. Disclosure is, yeah, Mike and I have a consulting deal with them. I own some of the stock personally and in my dad's account, and I'll be doing the private placement as well. Okay, so everybody take care, and you can see me a little better now. It is 6:30 in the morning, so I haven't shaved yet. Um, and everybody take care. Bye.